Hello and welcome to Mental Invest. In this video we're going to look at the three main types of monetary systems. So overall there has been, through the last 1,000 years, been three types of monetary system. Type 1, the hard money, type 2, paper money, and type 3, fiat money. And these three types is intervening in what is called a cycle. And we'll look at that in just a minute. But first let's just hear what these three types is. So hard money, that is basically metal and valuable items that is limited. That could, for example, be gold and silver, which is typically and the current standard of the in the world today of hard money. So gold is one of the main types of hard money, but many people predict that that cryptocurrency such as Bitcoin could become the new hard money, because similar to gold, which is the core principle of hard money, is that there is a limited amount. So a given country or government can't just print gold or print Bitcoin. There is a certain amount, and that's basically it. Then there is paper money, and paper money is claims on hard money. So when you have paper money in any given country, that money is directly tied to the hard money. That was the case when the US dollar was tied directly to gold. So instead of going around with gold in your pocket, which is very inconvenient, they made the paper money US dollar. So for X amount of US dollar, you knew that there were X amount of gold lying somewhere in a deposit that you could transition it to at any given point, meaning that the paper money keeps value based on the trust that there is a direct connection to the hard money. Then there is the fiat money, type 3. That is when you detach your paper money to the hard money. And when you are in this situation, it's basically where any government or national bank can just print X amount of money if they are in need of currency. And that is when you get into inflation typically. So how are these these three types of monetary system claimed together? So first off, you are in the type 1 where you have the hard money. But when a country is in need of more money, even to deal with crisis, wars, or other internal problems, they move from type 1 to type 2, such that they can have easier access to, for example, print money. So instead of going to hand out gold or physical hard money, you can go into type 2 and start to print money to represent the hard money that you have in the bank. The issue is then that is based on trust. So the users of that hard money trust that there is a direct link to the hard money. If that trust fails, you get into a situation where people storm to the bank, want to fetch out all the for example gold that there is in the bank, and to avoid that the country typically go into type 3, where they detach the currency to the hard money. And that was exactly what the US did when they got into a situation where they have actually printed a lot more dollar than there were in their gold deposit. So they got into a situation where they knew, well, we can't actually give people the gold that they have representation of in the US dollar because we don't have that much gold. So they detached the money, got into type 3, which is fiat money. So now the government can basically print and regulate the US dollar in any means they want, because there is no direct attachment. The issue with this is that at some point in time you simply get into much inflation and the currency is getting devalued. And even though that you might think, but will a currency like the US dollar that can't just be devaluated? Well, maybe not in the next 10, 20, 40 years, but if we look back in history and see basically all currencies that has existed in the lifetime of currency has in some way over a certain amount of time ceased to exist. For example, just take the European countries. They have all transitioned more or less from their local currency into the euro, which they now use. So it is actually not impossible to expect that in the future there might not be a US dollar, based on how the world order or the world situation has changed. But a typical cycle from going to type 1, 2 and 3 typically take 50 to 75 years to occur. And that doesn't mean that after type 3, which is the US dollar where it is today, it means that the US dollar will cease to exist. No, there can be again a attachment to some kind of hard money. For example, that could be Bitcoin which many suspect is the new thing, and then you can repeat that cycle again. But at some point you need to attach your money to some kind of hard money, unless you want to see too much devaluation of the money, which we see in some third world countries. So this was short about monetary systems. I will see you next time here on Winslow Invest.